Hi everyone, and welcome to the Simplify LLC channel. In this video, we're going to explain the pros and cons of LLCs. Real quickly, make sure to hit that button and subscribe to our channel to be notified with more helpful information about forming your LLC. All right, let's get started. So, you're getting your startup off the ground, and it's time to decide which legal form your business will operate. You could choose from a sole proprietorship, general partnership, limited liability company, or LLC, or a corporation or INC. Now, you may have even been in business for a while operating as a sole proprietorship, but are wondering about forming an LLC. Here, we share the pros and cons of running your business as an LLC. So, let's start with the advantages of an LLC. There are many. With an LLC, you enjoy more flexibility, easy formation, a perpetual existence, limited liability for all members, tax benefits, and modest maintenance costs. Sounds attractive? Of course it does. Let's dive into each of these advantages. Liability protections. Each member's personal assets are protected from an LLC's debts. But be warned that each member can also be held personally liable for any illegal acts, personal guarantees, or commingling of funds. Flexible management structure. Now, with an LLC, you can have centralized or decentralized operations management. So there are two types of LLC management structures. The member-managed LLC, in which management responsibility is shared by all members, or the manager-managed LLC, has one or a few people chosen by members to manage it. Now, this flexibility is one distinction between LLCs and corporations and partnerships. Tax advantages. An LLC offers options concerning state and federal tax treatment. An LLC can be treated as a disregarded entity, so as a sole proprietorship for only one member, or a partnership for multiple member entities. An LLC can also choose an alternative tax classification, like a C or S corporation. When treated as a sole proprietorship, the owner would report LLC income on a Schedule C with their federal 1040 and pay personal income tax. The owner would also pay self-employment taxes on LLC business income. Now, when treated as a partnership, the LLC would report income from operations on Federal Form 1065. Each member will also report on their personal return and their LLC's profit or loss as shown on their Federal Form K1. Now, if you have a multi-member LLC, you must register for an Employer Identification Number, or EIN, to report and pay taxes. Whether you are a single member or multi-member LLC, you can be treated as a C corporation for tax purposes. However, they are subject to double taxation. The corporate income is taxed at 21%, and the dividends that shareholders receive are also taxed, and progressive tax rates will apply. Now, if you want your LLC to be treated as a corporation, you can choose an S corporation to avoid that corporate tax. You will report your LLC's income on the member's tax returns, just like with a partnership. Also, members can be employees of the S corporation, receiving tax benefits like lowering self-employment tax so you won't have to cover Social Security and Medicare payments. Additional investment opportunities. Now, since an LLC is easy to form and has limited liability, pass-through taxation, minimal maintenance costs, and flexible management, it's a terrific way to pool investments. Easy transfer of ownership. An LLC is a legal entity separate from the owners and can be bought or sold like a corporation. An LLC sells membership interests, unlike corporations that sell stock certificates. Now, another differentiation between an LLC and a sole proprietorship is the ability to sell. If you want to sell a sole proprietorship, the owners must sell all the separate assets of the business. Adding members or transferring ownership is easy because an LLC is separate. Capital access. It's easier for an LLC to raise capital by issuing member interests to new members in exchange for money. An LLC can also raise capital through loans from banks using the LLC member interests as security against the loan. The status as a separate legal entity also offers credibility to a business. So, lenders and investors look favorably on the company and are more apt to invest. Since everything has good and bad sides, let's cover the cons of an LLC. Extra maintenance costs. An LLC has additional maintenance costs, including formation fees. After that, there are annual reporting, state business licenses, and registered agent fees. There are also state minimum taxes and tax compliance costs. The inability to issue stocks. An LLC can issue membership interests, but not stocks. Liability limitations. So while you are protected from LLC business debts, some circumstances would make members liable. There are specific actions that could void your limited liability protection. All right, now that you know all the pros and cons, you can start forming your own LLC. We have a separate playlist with how to form an LLC, how to choose the best state for LLC, and more videos about LLCs. Find the link in the description box below. For more information and how-to guides for starting and running your own LLC, you can also access our website, www.SimplifyLLC.com. Also, don't forget to like and subscribe. Feel free to write in the comments if you have any further questions, and we will see you next time.